we're over indebted across all asset classes. We've got debts that we can't maintain, yet we're going to have to refinance and roll those over. That's going to affect bond markets, stock markets, property markets. And then I look at this tiny little asset class called Bitcoin that's got no lending on it. And I think, therein lies the opportunity.
Hey guys, welcome back to the show today. I'm here with Peter from the Bitcoin Advisor. How are you doing, man?
Very well, thanks. Yourself?
I'm doing great. Thank you so much for doing this with me. But for those of whom they don't know you, do you mind to give us an intro and tell us a little bit about yourself?
Sure thing. So I run a business called the Bitcoin Advisor, and true to form or true to name, we help people procure and secure their Bitcoin. So we've been doing that for the last 8 years, helping wealthy families in Sydney do that. And about 18 months ago, nearly 2 years ago now, we decided to take that service globally and help people secure their Bitcoin in a collaborative security model, which has meant that we've been able to secure a host of families' Bitcoin and, most importantly, not lose any. So that's the only benchmark we work to.
What was your journey into Bitcoin? How have you discovered it?
It was a painful one to rehash this story, only because it's probably the most costly financial decision or inaction that I didn't take. And that was, my brother back in 2011, he said to me, you should buy some Bitcoin. And I told him that was stupid. That'll never work. Governments will shut it down. And then eventually I did the work. It took me a whole 5 years to figure out what this thing was. And if I had just listened to his advice and bought some, it would have been a very different story. But I tell that story because, excuse me, the most important thing for anyone who's looking at this now is a lot of people think they're late to Bitcoin, but the party hasn't started yet. There's more upside in front of us than behind us. And to those people who think, oh, if only I had bought back in 2011, it was a very different risk-adjusted bet or investment back then. It was far riskier to do that. There was much less upside relative to what we've got today. And I tell that story in the hope that someone hears that and is tossing and turning whether or not they should make an investment in Bitcoin. And hopefully they understand after the conversation we have that there is more in front of us than behind us. And it's actually a far better risk-adjusted bet to be buying Bitcoin today than it was in 2011.
One of my favorite quotes that says, yesterday was history, tomorrow is a mystery, but today is a gift. That's why we call it the present. So if you focus on yourself, on now, as opposed to what I could have done and all this kind of stuff, it's like a non-ending spiral towards darkness. Because at the end of the day, as far as we know, maybe even if you did purchase Bitcoin in 2011, you would have sold all of it when it doubled. So I agree with you 100%. The party has not started yet. I like that. I'm going to steal it from you. But why do you think we need Bitcoin? What is wrong with our financial system?
There are many things wrong with it, but I think it fundamentally comes down to the fact that the governments can print money and use that to do what they wish. If you have the ability to print money, then you have the ability to control outcomes and a whole host of decision-making processes that should be distributed amongst the community. But for whatever reason, if you can print money, then you have the ability to sway outcomes and decisions. And on a very fundamental level, if the government's able to print money, why do they make their citizens pay taxes? There's no real answer to that question other than, well, they shouldn't. But the problem that we've got is that we're off a hard currency monetary standard. We went off the gold standard in 71. The government's been printing ever since. And then there are a whole host of trickle-down effects that happen from that. There's a deterioration in society. There's a deterioration in decision-making. There's a lack of accountability because no one's got skin in the game. And that fundamentally is the key distinction that Bitcoiners, and this is where I think Bitcoiners are very principled and very hard with their decision-making, is because they understand that there's no way of getting it back if they muck up that decision. If you muck up your investment decision using Bitcoin, it's very, very unlikely that you're going to be able to recover that Bitcoin position in the future. And so you become very careful with it because you're completely accountable. And if you're like me, you probably, like a lot of people I know who are Bitcoiners, they get obsessed with the amount of Bitcoin they have. And I'd go so far as saying that each of their Bitcoins have a name and a spot in the, at the table for what they're doing. And, they're very attached to their Bitcoin. And so in order to create an outcome that parts you from that Bitcoin, you need to have a very, one of two things needs to happen. It needs to be an opportunity that is too good to pass up, or it needs to be something on a personal level that you can't live without. Now, for a lot of people, that typically is a home. For others, it might be an investment where they look at it and think, hey, this has got the ability to outperform Bitcoin. Personally, I look at that and think, well, depending on what time frame, it's very tough trying to find something that's going to outperform Bitcoin in the long term. And if I look at it with my investment hat on, I look at Bitcoin and think, well, my expectation is that Bitcoin's going to grow at 50% per annum for the next 20 years. Now, that's a relatively risk-free, or the best risk-free investment that I can make. So from an investment perspective, if I want to invest my hard-earned Bitcoin into a project, not only does it need to meet that risk-free benchmark of 50% per annum, but I want a premium on top to reward me for the risk that I'm taking in that project, which would at least be a 30% premium on top of the 50%. So realistically, you need to double your money every year if you want to be parting with your Bitcoin from an investment perspective. And I look at that and think, there just aren't that many investments around that offer that kind of return.
You mentioned homes and real estate. I don't know how you feel about this here, but in my mind, you don't own your property. Like someone else owns it on your behalf, and they allow you to have it as long as you, for example, pay taxes. And also it goes down with an asset versus a liability. So sometimes people confuse these two things. Like you said, Bitcoin is costing nothing to store anyway, whether a home has repairs, the roof, taxes, So at the end of the day, when you list down all the investments, it's a no-brainer. I don't know if you agree here with me.
100%. Depending on what route or track you want to go down, if you compare it relative to property, it's a no-brainer. If you look at commercial real estate across the board, that's probably off 35 to 45% off its previous highs globally, and there are no tenants to fill those properties, even at the discounted rates. They're looking at repurposing those commercial properties. And guess what? That means a re-rating downwards of the value of those properties and the underlying debt of that property. And you truly never own it, because in addition to all of that, you've typically got a mortgage to the bank, because in order to make that investment viable, you need to have some form of gearing on it. In addition to that, you're going to have property taxes on top of that, which typically are 1% per annum. So even if you do nothing with no one in there renting it, it's going to cost you at least 1%, even if you don't owe any money on it. And I look at this and think, this is insane for an asset that's going backwards, and the demand supply curve is at a huge disadvantage relative to Bitcoin. So I look at this and think, it's such a simple investment decision for me anyway, understanding what Bitcoin is and what are the pros and cons, risk-adjusted returns, supply-demand curve. When I compare that to property, it just is a complete no-brainer. And this is where I think a lot of the assumptions that property investors make, they don't really, I guess, scale out or take the timeframes of investing into consideration. Most people look at the last 50 years and just see a straight up left to right curve that continues to go up with a few bumps along the way. They don't understand that from 1930 to 1950, property went down 50% and then took 10 years to recover. So it's like a 20-year moot investment where the market never got back to reality. Same in the stock market, with Japanese stock market. And to be fair, the Japanese stock market's probably a harbinger of what we can expect in the West if demographics are anything to go by. And that's been a 30-year, trouncing, where it's gone down for 20 and it's up for the last 10. It's only just come back to break even to where it was 30 years ago. Doesn't sound like fun.
No, it's pretty mad when you think about how desperate we have been prior to Bitcoin, right? And in trusting things, for example, even gold itself. Like, you don't have your gold, you trust an institution or a third party to keep it on your behalf. I remember when I was in the UK, I invested in some gold because I wanted to fight inflation, right? I didn't know what I was doing, but I thought it was a good idea to purchase some gold, and I did. And then I remember I said to the guy, hey, is there any chance I can come and see, where you store it? Well, it's not really accessible. There are guys with guns. I was like, well, then you just sent me a photo of a piece of gold with my post-it on it. So that means you can take my name off and put your name on it, and it's yours, right? So I have to trust you. Yeah, no, but we're doing it for years. Well, I don't care. It's not mine. It goes without saying. There's no property there. It's just a promise, right?
This is the funny thing, that when you dig down and you realize what are the inherent risks across all asset classes, Bitcoin's the only one that doesn't have that. Every single asset class has that problem. The trust me, bro. And the problem is the trust me, bro doesn't really cut it. Not where we are in this part of the economic cycle. We're over indebted across all asset classes. We've got debts that we can't maintain, yet we're going to have to refinance and roll those over. That's going to affect bond markets, stock markets, property markets. And then I look at this tiny little asset class called Bitcoin that's got no lending on it. And I think, therein lies the opportunity. So on top of that, I can actually verify I own it. It's censorship and seizure resistant. This is the only asset on the world that can do all those things at once. And when the rest of the world figures out what that is, it's going to be in high demand.
It's go time. I like that. So now that we're discussing kind of ownership, what's your view on ETF here? Because technically the ETFs are, in one side, a vehicle for distributions, propagation, and all that kind of stuff. But on the other hand, we basically are describing the same property as gold. Like if I do have an ETF and you invest in my ETF, I could technically say, yeah, don't worry, bro. I got your Bitcoin, but I can do whatever I want on the backside of the shop. I can resell it. I can do so many things. I've spoken to some people, they are super pro ETF because allow institutions to go in, allow pension funds. But on the other side, I've spoken to some people, they say, whoa, not a big fan. It's actually bad because it goes back to the same pot as gold, as real estate. And what's your view here?
I think both of those points have valid claims, and I agree with both of them in part. I personally look at this as an extension of the Bitcoin funnel, that there's now a top of funnel, which happens to be the ETFs. And this is going to expose people, 300 people or 300 million people around the globe to Bitcoin that have no way, shape or form of investing in Bitcoin and no desire to. And to be fair, we've been at this for 15 years now. If you wanted to buy Bitcoin, you would have done it. So now there's a new avenue to buy Bitcoin in a traditional investment vehicle, which is now going to get more people learning about Bitcoin and more people exposed to Bitcoin. To me, that represents a huge opportunity, because what we're going to find is that that'll expose people to Bitcoin and what Bitcoin's all about. And a number of those people will then enter the rabbit hole, and they're going to go down this rabbit hole and figure out hard money. They're going to figure out, we want seizure resistant assets. We want censorship resistance. We want the best form of collateral ever invented. Then they're going to want to own the underlying. And so then they're going to learn about self-custody. They're going to learn about how they procure and secure their Bitcoin, and they're going to want to own the underlying as well. That won't be but a lot of people who understand that asset are going to go down that rabbit hole and do that. And to me, I think a lot of people talk about, you've got to learn about Bitcoin before you buy it. I think that is the wrong way of looking at it. Buy Bitcoin in a vehicle that's not going to hurt you, or you're not going to lose it. And then once you buy it, because you've got skin in the game, you're going to be far more incentivized to learn about it. So I would rather walk someone to the deep end, push them in with, way over their head that they're, comfortable with, and then help them swim, because they're now incentivized to swim because they've got skin in the game.
I remember the days where people used to lose Bitcoins because they were worth nothing. But nowadays, people will pay attention in losing something which is worth almost $70,000. So I'm 100% with you. I also agree on the two sides of the coin. Like, if you think about it, in my mind, Bitcoin is the perfect money. So then if I acknowledge that this money is perfect, then I can't say, well, then those people can't buy it. Those people can't use it. Well, otherwise, it won't be perfect. So I accept the fact that I don't want to control who owns it, on how they own it. If this ETF is going to destroy Bitcoin, well, that means Bitcoin is not the money we need, if it makes sense. So my only issue is when they'll say to me, or if they'll say to me, you will never be able to do self-custody. Okay, then I have a problem with. But as long as I can choose, I think I'm okay with it.
We're talking in absolutes there. And to understand the nuance of this and any investment decision, people just don't go and take 100% of their investable assets and go and buy the ETF. That's not how people work. People work with a 1% to 2% allocation. They look at it, figure out, do I like it or not like it? They'll watch that go from 1% of their asset allocation to 5% or 10%, and then they'll say, damn, I really love this asset. I want to buy more. And then they'll figure out, hang on, I've got the ETF. Should I buy the underlying? I probably should. If they've done any work on it and they're really excited about it, they would have done work on it. They would have spoken to any Bitcoiner who'd tell them, well, you don't own what you think you own in the ETF, so you've got to buy the underlying. Now they're going to put 10% of their net assets into the underlying, and they're going to have 5% in the ETF. To me, that's a good thing. That keeps the ratio the same. So I look at this and think, understanding human nature and how that relates to investment decisions is really important. and understanding that there's obviously a bell curve of outcomes that's going to happen. There's going to be the 1% who put in 1% and never change it, and it's going to ramp up to 99% of their assets. Then you've got the 1% who's going to put in 1%, it's going to go up to 10%, and then they're going to put all their assets in the underlying. And then there's a anywhere in between, that some people will buy more, some people won't, some people will buy more of the ETF, some will want more exposure, some will want the underlying. And this is where I think it's a good thing, because more people to Bitcoin, more people understand it. Most importantly, and this is where I think, because we're such social creatures and we take our cues from our surroundings and our peer group, now the most important thing from a peer group perspective with Bitcoin is it's no longer a socially unacceptable investment. Now Larry Fink's talking about it, and BlackRock's trying to sell it to you. So I'm not ostracized from my group to talk about Bitcoin now, because I can point to Larry Fink, the greatest investor or fund manager in the world, and say, well, he's telling his clients to buy it, so maybe it's okay for me to talk about it now. So from that perspective, having BlackRock ETFs and the rest of them market this quite heavily reduces the risk from a social perspective dramatically.
I also seen a shift in politics. I mean, I don't care about what happens in the US, but it's going to affect, of course, the market, right? I was in Nashville for the Bitcoin conference, and Donald Trump was there, and he was talking about Bitcoin and what he's going to do about reserve and all that kind of stuff. And even though I couldn't care less about what he says, because we all know politicians are all liars and whatever, left, right, center, I don't care. I just vote by buying Bitcoin. But let me rewind a little bit. It's going to impact the market, because if a candidate to presidency says, I'm going to do this, well, then if that candidate wins, well, then the market is going to believe what the promise was. Hence, there's going to be a potential pump in the price. Do you believe that we are in these 4-year cycles where Satoshi, he, she, they, them knew about the politics around in America, they knew about the money, they move in circles, and there is a pattern there. Do you believe in those 4-year cycles from Bitcoin? What's your view here?
A number of different views. I think the 4-year cycles are going to remain intact until we have an omega candle where someone with a money printer just buys and totally breaks it. So until that moment in time, we're going to have a continual cycle up and down, like the cycle that we're familiar with. We'll probably have a big run up, blow off top, and then the market crash. And those cycles will continue until a government with a money printer or an equivalent, maybe a company a lot bigger than Michael Saylor's, decides to play with the money glitch, which is just issue shares for free, go buy Bitcoin, wash, rinse, repeat until it's on autopilot and it becomes the stock market. So I look at this and think the forever cycle, which is what I think you're alluding to, where it just goes up forever and we don't have any more crashes. I don't think that's possible until we have a Federal Reserve, Bank of Japan, Bank of China, or alternatives step in and start buying. And the reason is that we've got, say, 100% or 50% of the market at any one time is new to Bitcoin. So they haven't gone through the euphoria of a bull run and then the disappointment, desolation of a deep bear market. And that's something, as a person, you have to experience to understand. You can read all the textbooks, look at the charts and go, oh yeah, I'd feel great here and I'd feel terrible there. But until you've actually lived through it, you have got no comprehension of how you're going to deal with it and the pressure that's going to apply to your life, both on a personal relationship perspective, how that affects your hopes and dreams, your own mental psyche. And I've spoken to a whole host of people who don't have the mental makeup to deal with those sorts of peaks and troughs. And that's okay. It's not for them. But the reason why I bring that up is because until we have a nation state player with a money printer, there's 50% of the market hasn't experienced that type of euphoria and disappointment. And so they're subject to the market drivers. And so those market drivers are going to continue until we have someone who's bigger than the market to just put their finger on the money printer and keep buying.
The previous top or the previous cycle, you could say, was extremely hard on me. Even though I've been here a few cycles, it becomes, for one reason, easier because, like you said, seeing there and going there, it's very different, right? But if you've done it a couple of times, you can say, okay, well, I've been here before. I kind of know what's going to happen next. I mean, hopefully, because we don't know, we can only assume. It's all assumptions after all, but they become stronger and stronger with time, and your conviction also becomes grounded. So whatever swing happens, you can deal with it. The issue is the money is going up. So if it swings from $50 to $1,000, okay, well, I had $50, I have 1,000. If it goes from 100,000 to a million, it's a different there. And if it goes to a million to 10 or 100 millions, it's another different reason. So it's interesting how you painted it so well, because some people cannot deal with volatility. It's just too much. And I don't know if you agree with me here, but I think volatility will diminish going up, because we have these type of players going in now. We have BlackRock, you have institutions, so they're not going to probably sell as much as retail. So I don't know what's your view here, but I think the more we go
They're
up,
going to sell more. They're going
gonna
to sell
more.
more. If we have a nation state player who does not yet understand what Bitcoin is, and they have the ability to buy at any price, by default, there's more volatility in front of us than behind us, just by the very definition of it. So I think you're setting yourself up for major disappointment if you expect volatility to go down. And I think if you maintain that volatility is going to increase, or at least be what it has been, then you inoculate yourself from the disappointment of a flat cycle.
I'm not saying it's going to zero, but for example, if you look into gold, in the beginning was so much more volatile, and now after the ETF, it's kind of, I mean, it's gone up and down massively after the ETF. I think it was in 2014 when it was launched, but then nowadays it barely moves. So I'm not talking about this cycle. Of course, I mean, we will see a 50% drop, 60% drop, or whatever it might be. But going forward in time, technically, it should kind of diminish the volatility. I don't know. Maybe institutions are going to go and, like you said, they're going to sell most of it because they want to crash the market and buy in cheaper.
Well, I think the Wall Street guys, that old Batman meme where he's talking to Bain, where Batman adopted the volatility, but Bain was born with it. Wall Street is all volatility. That's the only thing they care about. And although we think we're good at volatility, and the long-term hodlers are, trading it is a different beast altogether. And when they've got the weight of money and they can create outcomes that they want, they could crash the market overnight 90%. And we'd be sitting here wondering what's happened. And it was a phone call with 4 of the top 5 Bitcoin holders that just sent the market crashing. And then they pick up cheap Bitcoin. So I'm very wary of that. And that comes down to not, I guess, a concern that a lot of people are going to get complacent. A lot of long-term holders are going to realize, oh, hey, I want to cash in, but I don't want to sell my Bitcoin. I'm going to go and borrow on it. They think they're at a very conservative lending ratio, and then the market is going to continue to be volatile, and they'll get sold out of their position.
Yeah, when you start borrowing against your Bitcoin, it becomes tricky because this thing, like you said, is super volatile. So are you expecting let's say, who cares when we top? Who cares about numbers? I don't do price predictions anyway. I know it's going up for the time being, at least. I think we have another year, more or less, where price is going to appreciate. We have the election, we have the Fed cutting rates in September. So the momentum is good, I think, until we then face a bear market. Are you expecting another 80% drop from the top we'll see potentially next year? What's your view here?
Maybe it's PTSD or wanting to prepare myself for the worst possible outcome. But I kind of expect more of the same, that if we have a blow-off top, we're going to have an 80% drawdown. And last time we didn't see a blow-off top, and we still had an 80% drawdown. So obviously there was fraud and a whole host of other things that pushed that market around from the previous all-time high back in 2022 or 2021, whatever it was, 22. So I just think maybe from a self-protection perspective, want to think that, yeah, of course, every down market's going to be an 80% drop. And if you can have that number in your head, then, you can never be disappointed.
I'm prepared for everything, to be honest. Are you planning to take, quote, advantage of this volatility? Let's say when Bitcoin reaches certain price points, are you going to DCA out of the market because are you expecting a drop, or what's your play here?
I'm going to hopefully hold my position. The only thing that I can see being a factor in me selling would be for some personal reasons, i.e. buy a home or upgrade the home, you name it, sort of personal decisions that I just can't get around. So if the opportunity's too good to pass up, then, upgrading the family home is a really great way to spend some Bitcoin.
I like that. I think the same way. Sometimes people ask me, hey, what's your play? I was like, well, what am I selling to do what? What for? What am I selling for? Is this something I need to do? Do I have to pay rent? Well, okay, well, then I'll sell whenever I have to. But just to keep cash on my bank account or to try to buy more Bitcoin, those things are extremely, extremely difficult to do because you are essentially gambling that the price is going to go down. But what if you're not catching the drop? What if there is so many what ifs? And crypto, I know, in my mind, crypto is not Bitcoin, right? So you have Bitcoin on one side and you have crypto on the other side. And people in crypto, I would like to say, tend to think, oh, I can trade this, I can be clever, I can buy those things, I can multiply. And it's great. Like there's people they can, right? There's people they are successful in trading, in swapping, but that's not the average person. I think the average person is probably going to buy the top and sell the bottom. I don't know if you agree with me here.
100%. And this is something that just I find very amusing, and I shouldn't laugh, but it is funny. You've got the dumbest people on earth often think they're the smartest, so they go and attempt to trade. And then you've got the smartest people on earth think they're the dumbest. So what do? They go and buy and hold Bitcoin, and they don't touch it. And 999 out of 1,000 cases, the person who just bought Bitcoin and sat on it, didn't touch it for 10 years, will come out in front. Maybe even there might even be a higher percentage stat than that. But I just look at the whole crypto scene, and I don't want to dissuade anyone from doing what they're doing, because the personal ethos is you do you. So if that's where you get your rocks off and that's what you want to do, great. But understand what it is. It's gambling. And the thing that I look at and still am convinced will happen is that we will wake up to an Omega candle one day where Bitcoin is up 10x. And guess what? It's not going to happen in Solana or any of the meme coins where you go to bed and you wake up and, oh my goodness, the Federal Reserve has decided to have buy a reserve currency of meme coins. They're not doing that. So I look at that and think, well, I know over time Bitcoin's going to go up. I don't need to risk or take unnecessary risks. I think in the next 10 years, there's a 150x increase in Bitcoin, in the value of Bitcoin. And I look at this and I often talk to people or talk to clients who might want to go out the risk curve and invest in Ethereum and Solana and whatever it might be, meme coins. And I think, I'm telling you, there's 150x in less than 10 years just by buying Bitcoin with relatively no risk to the others. Yeah. And you want to go out the risk curve to buy the other stuff. I'm like, do you really think the problem's with Bitcoin, or should you have a look in the mirror? And this is where, if 150x return in 10 years is not good enough for you, I look at that and think the problem is not with Bitcoin. No investment will ever make you happy, because you're not going to do better than that on a 10-year time frame.
If you buy Bitcoin and hodl for a couple of cycles, on paper, technically, so far, you're going to be okay. Whether I think the problem, like you said, goes into people, they want things now, and they've read on the newspaper that this guy purchased a cat coin who's gone to $1 million and with $1,000 made 10 million. But that's the exception, not the rule. And most likely he's broke after 6 months because he has no idea on how to manage money. So the whole thing has been designed for going poking the degen we have inside ourselves. That's why I said to you off camera, I like to play these things, but I know, and I'm very aware that I'm gambling way more than I'm gambling with anything else. So what I do, I give myself an allowance, as if I say, hey, come on, Peter, let's go to the casino. I want to play roulette. I'm not going to go and gamble my home on it. Like, I'll take $100, and if I lose all of it, I had fun in the process. Who cares? The problem is, like, you have to be able to manage it. I think that's where the problem is. Because then what happens when you win the casino? What happens when you make $1,000 off $100? Well, you gamble it again, and then you lose it all. Otherwise, the casino wouldn't have reason to exist in the first place. So you have to be extremely disciplined, right? That's the point.
The other thing with Bitcoin, which is counterintuitive, is for our entire lives, we're programmed that if we want to add value, we've got to be doing something for it. And this is where, I guess, from a personal perspective, dealing with business owners who have sold out for large sums of money, when they come to Bitcoin, it's, hey, you just need to do nothing and sit and wait. And because they're used to doing something to create value, the very notion of doing nothing and having that go up in value is very tough from a psychological perspective for a lot of people to take. And they feel like they need to be earning their money. and they don't understand that the earning the money is actually, in fact, just sitting on your hands and letting time do its thing. That's the really hard thing for a lot of, I guess, business owners who have come to Bitcoin because they feel like they need to be doing something when, in fact, the very actions they're taking and the actions that they're propagating into the future are actually to their detriment, not their benefit.
I love this. And if you think about on a philosophical level, doing nothing is extremely hard. The greed kicks in because Bitcoin has done maybe a 10x, or we've gone over $100,000, and people are, left and right are saying, sell the news, Bitcoin, the bubble, whatever. So you want to secure, quote, your gains, whether in fact, I think the ultimate monk mode is 1 Bitcoin equal 1 Bitcoin. There is only 21 million, which, by the way, I completely disagree. There is way less than that because some have been lost forever. We don't know exactly, but supply is even less than we think it is. And there is people that never sell. So a portion of them, of their Bitcoin. So when you think about how much supply do we have in the market, it's next to impossible to say, right? But it's scarce. And like you said, it's the only thing we can own. So all those things are going to impact on your mind. And I think there's going to be a time when people, and I like this, by the way, I don't know if you agree with me, but I like the karma of things. For example, when I pass on, let's say I want to do something personal for me, I've been holding for 20 years, I want to buy myself something. It doesn't matter what it is, a watch, a car, a home, whatever the reason might be. I'm selling my Bitcoin. So I'm passing on something really good to someone else because I know that the asset is going to go up in value. Whether when I play with coins, I'm literally passing on garbage, which it might not even exist in 6 months. Do you know what I mean?
It's true. It's like a hot bucket of you're trying to get rid of.
Exactly. So
hopefully you don't get stuck with it when the music stops and you've got to eat it.
But it is like this. So on a karmatic level, when people are saying, oh, I make money with memes, well, okay, yes, but think about how are you making money? Like, I don't think we will have, some meme coins are going to be probably around for a certain amount of time. I think there's going to be a market for certain things. I don't think Bitcoin is going to be the only cryptocurrency, even though, like I said, I think Bitcoin is not crypto. But if you ask me, is there a market for cryptocurrency? Yes. Do you think Ethereum has a place to? Yes. They will exist. They might will replace or whatever, but people are going to build on things. There's going to be services, but we don't know. It's like a ticking bomb. Like if you pass it in time, well, you make money, but then it might explode in someone else's face. So on a karmatic level, it's something you probably have to consider, right?
I agree. Not a lot of people talk about that, and it's brilliant that you brought that up because I can tell you from a personal level, I have a moral and ethical problem with dabbling in altcoins because I understand the value prop of those are precisely zero moving forward relative to Bitcoin. And on that level, I think there is a karmic debt that you create by playing around with that, and you're effectively selling a promise to someone. And a lot of those markets are held by insiders with great information and have the ability to dump on the market because there's the information asymmetry is very skewed to the founders and the foundation and people on the inside. So Bitcoin, I think, is the fairest market. Not only that, it's, I guess, from a moral and ethical perspective, I think the best market in the world that we have. I think on a personal level, that's probably why I try and play in that space only, because I think long term, that's the only thing that's going to hold any value. And so if you're playing long-term games of 10, 20, 30 years with, say, with us, with client money, then that's the only game that you can play that's got all of the outcomes are slanted to your favor. Whereas the altcoins, they just don't have that ability. One thing I have talked about with a number of people is how to outperform Bitcoin, because that's ultimately what everyone wants, right? How do you outperform Bitcoin? And because everyone wants more Bitcoin. So a lot of people think it's possible to do that in the altcoin space. Personally, I think that's going to get tougher and tougher to do because you've now got larger and larger funnels of money going into Bitcoin and maybe a little bit into Ethereum, but it looks like that the Ethereum ETFs are actually outflows, not inflows for that. So it's really only Bitcoin that's getting those flows. And so where in previous markets, money would flow into Bitcoin and then out to Ethereum, Solana, and then out the risk curve. Because the top of funnel is now the ETF and it's only got the avenue to flow in the ETFs, I don't think we're going to have that movement of capital out the risk curve as much as we did in the previous cycles. So I think it's going to be far harder to do or outperform Bitcoin. So it's just a really tough one. It's coming up with services or products that the market and the world loves and wants, that want to pay you in Bitcoin, I guess, is the best way to create more Bitcoin.
When I think about it, I like to see a market where we will have other projects doing other things. I don't think Bitcoin is going to be the only thing, but they're not competing with Bitcoin. Bitcoin has no competitors. Like, there is no CEO, there is no team, there is no one you can go and point a gun on their head and say, do this. Whether everything else has a company. I mean, you can go to Vitalik Buterin and say, stop this. Would the average person care? No. I mean, we are talking about self-custody, proof of work, and all these things are only for a minority of people. But for the average Joe, they want to use an app and buy something. There might be a market for some altcoins to do certain things. But like you said, the window is closing, I think, and some are going to crown themselves as the winners, like in any other market, you know. And there is a lot, by the way. So if you think about layer ones, if you think about Solana, Ethereum, Avalanche, Cardano, there is way too many. So at some point, some have to die.
There's going to be consolidation. I agree. I look at this and I think there are over 2 million altcoins in the world, and less than 8 of them outperformed Bitcoin in the last 4 years. Statistically, it's impossible to pick what's going to be the winner. And I'm telling you, there's 150x in Bitcoin in the next 10 years. It's like, go and find something productive to do. Don't worry about it. Be happy with 150x return in 10 years. find a productive hobby to do. So, yeah.
Exactly. You can read so many books, listen to many podcasts, go on vacation, do whatever, stay healthy, go outside, swim, run. You can entertain yourself.
Learn an instrument, do whatever.
I love this. But yeah. Peter, it's been an absolute pleasure having you on the show. Thank you so much, man. I really appreciate our conversation.
It's been an absolute pleasure. Really appreciate it, Maurizio.
Thank you. Enjoy the rest of the day. And guys, thank you so much for watching. Like I said, in the comments down below, you'll find Peter links. So make sure to go and check him out. And yeah, see you guys on the next one. Cheers.